Welcome to the Deep Dive. We're here to cut through the noise and pull out the key insights from the information you send us. You want to get up to speed quickly, and, well, that's what we do. Today, we're looking at something you flagged that looks pretty interesting, the Hani Trading Platform.
That's right. We've got some material from its GitHub page, some website info, too. And what's striking is this isn't some brand new thing, right?
No.
It's described as a legacy version, built from years of actual trading experience, Forex indices. And now the creators put it out there as open source for learning, inspiration, that kind of thing.
Okay, legacy version. Interesting. So our mission here is to figure out, what made this platform tick, what were its standout features, and crucially, why share something like this, something battle-tested, with everyone?
Good questions.
So fundamentally, what was it trying to do?
Well, at its core, it was built to be a really professional level trading platform, specifically designed to work with MetaTrader. The docs really stressed that it wasn't just about looking good, it was about being practical, dependable, something you could actually use in, real trading.
And it sounds like it had a lot going on feature-wise. I mean, looking at the GitHub, the first thing they mention is this real-time GUI dashboard built with PyQt6.
Yeah, PyQt6. That's a Python library for building interfaces.
Okay.
So think of it as powering a separate dashboard.
Okay.
Probably gave traders a much more detailed, maybe even customizable view of their trades compared to just the standard MetaTrader interface.
Gotcha. So more than just visuals, it also talks about multi-strategy auto-execution via Webhook integrations. That sounds, pretty advanced. What does that actually mean for a trader?
It means you could have, say, several different trading strategies running at the same time. And these webhooks, they're like little messengers. They let the Hani platform get instant signals from outside sources, maybe different charting tools, signal providers, whatever. When a signal comes in, bang, the platform can automatically execute the trade based on that specific strategy. And it could be juggling multiple strategies like this simultaneously.
Now this one really caught my eye. Stealth, stop loss, and break-even automation to protect from broker manipulation. That's quite a claim. What's the thinking there?
Yeah, that touches on a worry some traders have, right? That brokers can see their stop loss orders and maybe, target those levels.
Right, stop hunting.
Exactly. So a stealth stop probably means the platform holds the stop loss internally. It doesn't place it directly with the broker until needed. It's like a hidden trigger.
So it offers a layer of protection, or perceived protection anyway.
That's the idea. And the break-even automation is more standard and priest. Your trade hits a certain profit, the stop moves to your entry point, locks in your initial capital.
Okay, makes sense. It also mentions TP1 and TP2 per position with manual and automatic controls. So setting multiple profit targets. How's that used?
Precisely. It allows for more sophisticated profit taking. Maybe you set TP1 to grab some profit early, secure the bag a bit.
Right. Then let the rest of the position run towards TP2, aiming for a bigger win, but you've already banked something. Having both manual and auto controls just gives the trader flexibility.
Okay, and digging in a bit more. An internal strategy engine with 5 trade modes supported by webhooks. What might these different modes be?
Think of them as different personalities for how the platform acts on those incoming webhook signals. They probably represent variations, maybe more aggressive entries, more conservative ones, different ways of handling signals depending on the mode selected, adapting to different market feels maybe.
Like different driving styles for the same set of traffic lights.
Yeah, that's a good analogy actually.
Okay, this next one sounds crucial. Real-time high-impact news detection. It mentions fetching online data and an Excel backup. Why is that so important?
Oh, absolutely vital. Big news releases, think non-farm payrolls, central bank announcements, they can just blow up volatility, right? Prices can jump like crazy.
So by grabbing this info in real time and having a backup just in case, the platform tries to warn the trader, hey, danger zone approaching. Helps you decide whether to sit out or tighten up.
And it builds right on that with configurable trade blackout periods during news and off hours. That sounds like smart risk management.
Exactly, proactive. You could tell the platform, look, don't even think about placing trades during these specific high-risk times, like around major news or when the market's thin overnight. Protects your capital from nasty surprises.
Right. Okay, let's shift to tracking performance. Real P&L calculation with commission tracking. That seems basic, but adding commission tracking is key, isn't it?
Absolutely fundamental. Seeing raw profit is one thing, but commissions, they bite. especially if you trade a lot.
Yeah.
Factoring them in gives you the actual net result, the true picture of whether you're making money or not. It's critical for realistic assessment.
And then there's daily profit tracking with auto lockout and auto close trades when the daily profit target is reached. Sounds like built-in discipline.
That's exactly what it is. It encourages discipline. Set your daily goal, say make $500. Once you hit it, the platform can just stop trading for the day or even close out open positions. Stops you from getting greedy, overtrading, and giving those profits right back. Psychology management, basically.
There's also a balance logging system, stores the previous day's balance. How does that help?
Simple, but useful. It just keeps a running tally of your account balance day by day.
Okay.
Lets you easily see the trend over time. Are you growing consistently? Are there patterns? Helps spot issues you might miss just looking at single trades.
Okay, back to automation. Auto trading with dynamic lot calculation. Fixed, variable, martingale. Can you break down those lot sizing approaches?
Sure. Lot size is how big your trade is, right?
Yeah.
Directly impacts risk and reward.
Right.
Fixed means same size every trade. Simple. Variable adjusts the size based on, say, your account balance may be risking 1% per trade. Martingale. That's more aggressive. You increase your lot size after a loss, trying to win back the previous loss plus a profit on the next trade. Risky, but it's an option the platform supported. Offers a whole spectrum of risk approaches.
Got it. Then there's absolute line mode, linear trade line support. What kind of trading does that enable?
That sounds like it lets you draw straight lines on your chart, trend lines, support, resistance levels, and then use those specific price levels as triggers. Like open a trade if price breaks this trend line or close if it hits this support level. It's just a focus on precise price action trading.
And the last feature listed here, a drawdown recovery engine to compensate for previous losses automatically. Sounds potentially risky.
That's a very good point. It can be a double-edged sword. These systems try to automatically dig you out of a hole after losses, often by increasing trade size or using specific tactics.
Right.
They can work, but if the recovery trades also lose, you can end up magnifying your losses pretty quickly. It needs very careful setup and understanding.
Yeah, I can see that. It also specifically notes full compatibility with both hedge and netting MT5 accounts. Why is that important to mention?
MetaTrader 5 account types. Hedging accounts let you hold simultaneous buy and sell positions on the same instrument.
Okay.
Netting accounts consolidate everything into one single net position. Different brokers, different regions have different rules. Supporting both just means the platform is more versatile, usable by more traders.
Right, wider appeal. You also mentioned these smart hedging and strategy modes earlier. Single direction, traditional hedging, all signals, smart hedging, adaptive. Can you flesh those out a bit?
Yeah, these sound like preset logic bundles for how it handles hedging and signals.
Okay.
Single direction, probably pretty straightforward, only trades in the direction of the signal. Traditional hedging likely opens an opposing trade under certain conditions. All signals maybe just takes every signal it gets. And smart hedging, adaptive, that suggests something more complex. Maybe it changes its hedging approach based on market volatility or how strong the signals seem. More dynamic.
The creators keep saying this is an institutional platform born from real experience, not just theory. Looking at all these features, does that claim seem fair? What parts feel institutional?
Well, considering the sheer number and type of features, yeah, I'd say it points that way. Things like the detailed risk management, the stealth stops, the multi-TP levels, the dynamic lot sizing, the drawdown recovery engine. That's pretty sophisticated stuff.
Right.
Plus the multi-strategy automation via webhooks, the news integration, detailed P&L with commissions. It all suggests a tool built for serious, maybe even systematic trading. Goes beyond basic retail platforms.
Okay, so got a pretty good handle on the what. Now the why. Why spend years building this complex thing and then just give a version away? Open source it. The sources give a few reasons.
Yeah, one key reason mentioned is wanting to increase transparency in trading tool development.
Okay.
Basically opening the kimono, showing people how a real platform is built, builds trust, maybe demystifies things a bit.
And they also wanted to offer a real battle-tested example of a fully usable platform. That feels important. It's not just theory, it was actually used.
Exactly. It's not just sample code. It presented as something that worked in live markets. That gives it way more credibility as a learning tool.
Right.
You can see how concepts are applied practically, warts and all, maybe.
They also mentioned wanting to showcase the level of quality and professionalism in their system design. Makes sense. Releasing good open source code is like a business card, right?
Precisely. It's a portfolio piece. Shows off their skills in programming and trading logic. Could attract clients or partners for their newer commercial stuff.
And the final point was to provide a base for others to learn from, improve, or build upon. That's the classic open source spirit, isn't it?
Absolutely. Giving back. Letting others stand on their shoulders, maybe take the code in new directions, contribute fixes, fosters that community aspect.
And it seems like their focus now is on direct integration with MetaTrader and CTrader in our commercial systems. So this open source version is like looking at an earlier chapter.
That's exactly it. It's a snapshot of their journey. They're sharing this older version while they focus on, presumably, more advanced, tightly integrated commercial products now.
The person behind it all is identified Hani Musavi, system designer, trader, and inventor. They even provide his website, hani.solutions, and an email, so he's not anonymous.
No, and that adds a personal touch, doesn't it? It's not just code dumped online. There's a person with a history in trading behind it. Makes it more relatable, maybe encourages engagement.
And the license is MIT. For listeners who might think about looking at the code, what does MIT generally mean?
MIT is usually very permissive. Generally, you can use it, change it, distribute it, even commercially, as long as you keep the original copyright notice.
But there's a catch here.
Yeah, they added a specific condition.
Yeah.
You can't just take the platform and resell it as is commercially without getting explicit permission first. But modifying it, building on it, that seems okay under MIT.
Okay. And here's a little teaser at the end of the source material. They mention a private Binance-compatible version exists, and they hint it might become open source if there's enough community interest. That could be big for crypto traders.
Oh, definitely. It suggests the core logic, maybe many of these features we talked about, could work for crypto too. If that Binance version ever goes public, well, that would be a pretty significant resource for the crypto trading dev community.
Right. So, wrapping up this deep dive, what are the main takeaways for our listeners about the Hani Trading Platform?
I'd say. 1, it was a genuinely sophisticated platform for MetaTrader, packed with features. 2, it was built from real-world trading experience, not just theory. 3, the focus was heavily on automation, risk management, and detailed tracking. And 4, this legacy version is now open source, a valuable learning tool, a transparency effort, and maybe a showcase for the creator's current work.
Yeah, it really feels like we got a shortcut here. We didn't have to read all the code, but we got a solid understanding of what went into building a serious trading tool and why it was shared.
Exactly. It's a chance to look under the hood of a system that was reportedly used for real trading, that offers insights you don't get from purely academic examples.
So a final thought for you, the listener. In a world full of trading tools, how much weight do you give to the practical, hands-on experience of the people who built them? Maybe check out the Hani Trading Platform on GitHub. Even just browsing the project structure could be eye-opening, and perhaps it sparks an idea: how would something like this be adapted, or what would you build differently?
Good questions to ponder.
Thanks for joining us for this deep dive.